Thanks, Josh. Morning, everyone. Great to be back in Noosa, this lovely part of the world, for this conference. I've missed the last couple of years, so I'm here to provide an update on our very high-profile discovery and development project, and obviously all the exploration activities in our portfolio as well. So who's Chalice, for those who don't know us? We're famous, I guess, for our 100% owned Gonville project. It's the largest palladium, nickel, copper development project in the Western world. So it's a very significant greenfield discovery in 2020. It's a very large-scale resource just outside of Perth in Western Australia. You can see on the right-hand side there, it's a 17 million ounce precious metals deposit, 960,000 tonnes of nickel, 540,000 tonnes of copper in resource as well, a little bit of cobalt, and it starts at surface. So it's a very, very significant deposit. Quite a unique mix of metals and quite an interesting time, I guess, in the context of where those metals prices are today to be talking about it. We've got a pre-feasibility study underway as well as regulatory approval, so we're in the pre-development phase. We're looking to get all those study work and all the permits in place by late 2026 to make a decision to construct this project. It's also surrounded by 9,500 square kilometres of largely unexplored tenure, as you can see there on the right-hand side. So a very, very interesting part of the world for new discoveries. So keep an eye on that part of the world as we continue to explore it. Just a couple of weeks ago, we announced a strategic MOU with Mitsubishi Corporation. So Mitsubishi is the largest of the Japanese trading houses, fantastic development partner, and involved in some of the largest sort of mining development projects in the world. We've got a collaboration with them throughout the course of the PFS, and we're intending really to form a binding partnership following the completion of the PFS, and that is about a year away from where we are today. So fantastic to have them on board, and very important part of developing an asset of this size. It's very leveraged to palladium and nickel prices. Obviously, those prices are right in the cyclical lows at the moment, so it's an opportunity for those who are contrarian or counter-cyclical to get exposure to those metals. It's obviously a very, very competitive asset as well. It's predicted to be the lowest cost PGE mine in the Western world. It's very, very unique. Most of the world's palladium comes out of Russia and South Africa, so it is a strategic proposition as well. We've got a very strong balance sheet, 107 million in cash and listed investments, actually a little bit higher than that today, given some recent movements, and we're going to spend about $15 million this year to complete the PFS on our project. We're ASX 300 listed. You can see the share price has been sort of at 3-year lows at the moment, roughly $1.20 a share. The register is there on the left-hand side, some very supportive individuals and large institutions. Currently trading at an enterprise value of roughly 400 million Australian dollars. And the register is largely unchanged. We have had a very, very sticky, core group of followers who have believed in the quality of this asset, and that's been great to see. So why palladium? For those who don't know the metal, it's obviously a precious metal, but its really sort of sole purpose is to take emissions out of petrol engines. And why that's important at the moment, the narrative you hear is that batteries and battery vehicles are going to take over, and we're going to electrify transport. What's happening in reality is actually people are buying hybrids. So the early adopters of battery vehicles have bought already, and now growth is really stalling. So what we're seeing is a much more rapid growth in plug-in hybrid electric vehicles, as well as extended range electric vehicles. These vehicles have a palladium-based catalytic converter in it. At the moment, though, most supply-demand models don't reflect that change in circumstances and demand profile recently. So these trends are becoming quite clear, though, and yet the palladium price is sitting around about a 5-year low. So it's really a lag effect that we think will correct in the near term. I mentioned supply. Supply for palladium is really all about Russia and South Africa. You can see on that bottom left-hand chart. These are deep, aging, underinvested mines. So if you think about something like the coal sector, you saw in 2015 the Paris Agreement, which really just dried up all capital investment in coal. A number of years later, the price goes ballistic because demand hasn't actually dropped like forecasted. So we think something could transpire, something similar could transpire in palladium. You can see the price movements over the last 5 years or so there. Well before COVID, the price really started to take off from about $1,000 an ounce to about $3,000 an ounce. And really, the story of the last 5 years has been all around supply anxiety. And given the nature of Russia and that conflict in Ukraine, there's been a lot of geopolitical forces at play here in the metal. But at $1,000 today, it is very much in unsustainable territory. And why is that? Because as you can see on this plot, basically this is the costs of, or the cost curve for PGEs. We're deep into that cost curve. So it means about 40% of the world's PGE mines are actually uneconomic or unprofitable at today's prices. So that tells you either the price needs to correct or the industry needs to contract. A lot of that supply needs to be turned off. And at the moment, there's a big lack of discipline in South Africa. So a lot of that supply isn't being turned off, which is pushing the market into an oversupply condition. And what's significant there as well is on the right-hand side, those mines that occupy the bottom part of or the right-hand side of that curve, they're mostly South African, Zimbabwean mines, and their costs are escalating rapidly. So that's going to push the marginal cost up for those players, and that should be supportive over our time horizon. Before we get into production, we expect to see a much higher price than $1,000 an ounce. So our project, I mentioned obviously Mitsubishi involvement. You can see where it's located just outside of Perth. It's a very large deposit, a very unique metals mix. About 50% of the revenue will come from palladium, so it's a very unique exposure to that metal. 25% from nickel, 15% from copper. So there is a level of nickel and copper price incentive for this project as well. It's not just all about palladium. It's going to be a very competitive asset once in production. We've already purchased about 22 square kilometres of farmland that occupy the deposit and the surrounding area. So we've really carved a pathway to get this project permitted. It starts at surface. There's going to be some very high-grade material that comes through the mill in the early years, so that's fantastic for the payback period. Really, all the focus of the PFS at the moment is understanding the mineralogy, and we have quite a degree of variability in the styles of mineralisation in this deposit, so we need to understand and do a lot of detailed test work to understand exactly what we're going to recover into what products. The resource as well is quite unique because there's a high grade component. Like I said, you can see there about 10% of the global tonnage has about 2.5 times the average head grade. So there's a nice juicy 59 million tonnes there within the bulk resource at 2 grams per tonne PGEs, 0.2 nickel, 0.21 copper. That starts at surface, so that's the obvious place we're going to start selectively mining. So we also get better recoveries at a high-grade material as well. So that is the optimization exercise, and what we're scoping really at the moment is what is the optimum mix of grade and how does that turn into recovered metal, and therefore how does it reflect the margin and the economics of the project. And as it says there, as prices increase, one of the unique parts about having a big low-grade disseminated resource like this is that as prices move upwards over time, and inevitably that's what history shows us, is that prices do escalate in real terms for most commodities over time. So as prices do go up, more and more of this resource becomes economic over time. And that means you can scale from being a small-scale operation, a high-grade operation to begin with, using selective mining techniques over the longer term into a bulk type of open-pit operation. We've done all the drilling here in this deposit now. You can see in the red there, that is indicated resources. Indicated resources are basically defined now down to 450 metres below surface. And we know the system remains open below about 1,100 metres below surface. So there's some very nice grade, typically along the footwall of the intrusion, down to the bottom left-hand side of that page. We've drilled well and truly enough now to define a starting project, but this system will continue to grow as it goes into production, and that is really the unique proposition of such a large-scale asset. In terms of the flow sheet, I mentioned this is where all the effort is at the moment in the PFS. We're doing metallurgical test work on around 100 different met samples from all across the deposit because we need to understand the variability. And obviously we put out a study last year that viewed the asset as a homogeneous sort of averaged view on recoveries. And what we're seeing in the test work at the moment is that there are certain areas of this deposit that will recover much better than the average. So we will use a combination of flotation, which is obviously very, very proven. We have the ability to produce a copper PGE concentrate, which is a very attractive product, as well as a nickel cobalt PGE concentrate, just using flotation. and then whatever PGEs we haven't recovered through flotation, we'll use a leach, a standard sort of gold industry leaching technique to produce a doré at the back end. Over the longer term, and the bottom right there, as you can see, a future option is basically us doing more processing on the nickel over time. That is an area that a lot of nickel companies are looking at for good reasons, because nickel smelters are just not that efficient at recovering nickel, cobalt, and PGEs. And on top of, I guess, the project, we're spending in the order of $20 million on Gonville this coming year on the studies as well as permitting. And we're going to spend roughly $6 million on regional exploration. And I mentioned the size of the land package that surrounds our project. So, we need to remember that Gonville cost shareholders about $75,000 to find. And that was because it basically was staked by the company, it was targeted by the company, and Chalice's geologists, were very quick and very effective in exploring this region. We're doing exactly that same work now across about 40 new targets in the region. We've drilled about 7 of those thus far, so there's about 30 odd to go, and over the course of this year we will just continue to just put an initial drill hole into all these wildcat targets, which provides, I guess, a hard to predict but a very, very beneficial outcome and good risk reward proposition for shareholders. So that's an important part of our business, exploring this region and watch this space as we continue to guess move targets through the pipeline and go and drill over the course of this next 6 to 12 months. So we really sort of recutting the project at the moment to focus on the higher grade, a starter project with a lower capex and higher margin. We really focus as well on that test work to drive higher metal recoveries. We know that, as I said, that the metal recoveries are really what's going to drive the economics of this project. Obviously, we're confident as well. We're going to work with Mitsubishi. They're going to bring a lot of insights into the marketing of products and really bring that other end of the value chain to the project. So we'll be looking to formalise a joint venture with them within the next 12 months as well. And really, I guess, we're setting ourselves up for success with this project in a tough metals price environment. But as I showed earlier, that metals price environment is really an unsustainable sort of setting at the moment, so that can catalyse and change very, very rapidly. And we've seen that particularly in PGM prices recently. So in summary, I guess the value proposition is quite simple. We own, a very, very unique asset. It is really a world-class scale asset in WA. Chalice's team really has the track record. We've shown how effective we can be at finding these things. We've brought in the expertise now to develop this project, and we're continuing to, interrogate the region for the exploration upside. Obviously, keep an eye on battery electric as well as plug-in hybrid vehicle sales. If you believe electrification's happening slower, then maybe PGMs or palladium is a place you might want to look as an investment. And Chalice is obviously a very, very leveraged play on palladium. Internally, that PFS test work is I guess, the main driver of the PFS. And obviously us defining the combination and that connection between the different geological domains and different metallurgical domains is really the key to success here on this project. And obviously keep an eye on our exploration activities as we continue to interrogate this exciting area. If you've got any further questions, please come and see me at the booth. Otherwise, thanks very much for your time.